Welcome back to the Pro Ticker Podcast, your Wednesday morning edition covering major financial magazine headlines, everyone.
Everyone.
We've got a lot to unpack today as we
Mm.
dive into these latest market moves and the forces that are shaping them,
Right.
It's amazing to see
It is.
how quickly things can change in the financial world.
Yeah.
And today's headlines are a perfect example of that,
Definitely a dynamic landscape out there.
for sure.
We've got news from Bloomberg,
Yeah?
Wall Street Journal, Market Watch, all pointing to major shifts
Yeah.
happening across different sectors.
Okay, let's dive right in. One of the biggest stories grabbing headlines is this Chinese AI startup called DeepSeek.
Right.
The Wall Street Journal has a great piece on how
Yeah.
they've managed to create a language learning model,
Yeah.
or LLM, that's rivaling those from giants like OpenAI and Alphabet,
Yeah.
but at a fraction of the cost.
Yeah. What's fascinating here is not just the technological achievement itself, but the ripple effect it's having across various industries.
Yeah.
For instance, think about the energy sector. Those massive data centers that power these AI models.
Right.
They consume a tremendous amount of energy,
Yeah.
and investors were betting big on that demand.
Yeah, I remember reading about how some of these data centers use as much power as entire cities.
Exactly. And the Wall Street Journal reports that when news of DeepSeek's efficient model hit,
Yeah.
there was a sell-off that impacted natural gas producers, pipeline operators, even companies owning land in Texas, where a lot of these data centers are located.
Wow.
It seems investors are now rethinking their bets
Yeah.
on an AI-driven energy boom.
So cheaper, more efficient AI could actually lead to less demand for certain energy sources in the short term.
Yeah.
That's a pretty counterintuitive outcome.
It is. And, it makes you wonder,
Yeah.
what happens if this cheaper AI leads to even more AI applications being developed?
Right.
I mean, think about all the industries that were priced out before.
Uh-huh.
If they suddenly have access,
Right.
wouldn't that eventually drive energy demand back up?
That's a great point. The Wall Street Journal actually touches on this, saying cheaper AI could mean more AI being integrated into everything, even things like our smartphones.
Precisely.
Mm.
And that brings us to another sector impacted by DeepSeek, semiconductors.
Okay.
NVIDIA, one of the leading providers of those high-performance AI chips,
Yeah.
saw its stock drop 17% according to the Wall Street Journal.
Wow.
And TSMC, which manufactures those chips, also took a hit.
So some investors are getting spooked, thinking DeepSeek's cost-effective approach could disrupt the demand for those high-end chips. But then I also read a Wall Street Journal article suggesting this could actually be good news for companies like TSMC in the long run.
Right, because if cheaper AI fuels a surge in new applications and devices that
Yeah.
utilize AI,
Right.
the overall demand for semiconductors could actually go way up. It's like a
Mhm.
paradox, efficiency leading to greater consumption.
It's almost like this innovation is shaking up the foundations of so many different markets.
It is.
And speaking of market shakeups, let's shift gears to the luxury goods sector. MarketWatch had a piece about Bernard Arnault,
Uh-huh.
the head of LVMH,
Right.
slipping down the billionaire rankings.
Now, what's interesting here is that LVMH didn't have a bad quarter.
Okay.
Their results just weren't as impressive as some of their competitors like Richemont and Burberry.
Right.
It seems investors might be getting a bit more selective about
Yeah.
where they're placing their bets within the luxury market.
Could this be a sign that they're sensing a shift in consumer preferences?
Potentially.
Or maybe some broader economic uncertainty?
Could be.
I mean, luxury goods are often seen as discretionary spending, right?
That's a very good observation, and it ties into this broader theme of uncertainty that we're seeing across the global markets.
Yeah.
Let's take a look at global trade, for instance. Bloomberg is reporting that aluminum prices are on the rise as the European Union prepares to potentially ban imports of Russian aluminum.
This sounds like a major development. What's the context here?
Well, it's part of a broader sanctions package that's being considered.
Okay.
But as Bloomberg points out,
Some EU members have expressed concerns about finding alternative suppliers.
right.
And Russia, in the meantime,
Yeah.
has been increasing its aluminum sales to China.
So we could be looking at potential supply chain disruptions, maybe even price increases for consumers.
It's certainly a possibility.
Mm.
And on top of that, we have these looming trade tensions between the U.S. and China, Canada and Mexico.
Right.
President Trump's tariffs are set to go into effect soon.
Yeah.
And both Bloomberg and CNBC have articles highlighting the uncertainty around the impact this will have on inflation and economic growth.
It seems like everyone's on edge trying to figure out how all these pieces fit together. And speaking of things that make markets nervous, we can't forget about the Federal Reserve. Today's the big day for their interest rate decision.
Right, and Bloomberg's reporting that the general consensus is they'll hold rates steady for now.
Okay.
But what's really fascinating is what's happening behind the scenes. Traders are placing bets on the timing and depth of future rate cuts. Sounds like there's a lot of anticipation building around the Fed's next move.
Yeah.
What are some of the indicators traders are watching?
Well, Bloomberg has a good breakdown of that.
Okay.
They mention an interesting options trade that seems to be hedging for a bigger bond rally. It's pretty complex stuff, but it shows you how closely people are scrutinizing every little signal.
And of course, we can't forget the political pressure surrounding all of this. MarketWatch had an article about President Trump recently saying he wants the Fed to cut rates, which could be putting additional pressure on them.
It's a reminder that these monetary policy decisions are rarely made in a vacuum.
Right.
There's always a political dimension to consider.
So it seems like we've got a lot to keep an eye on.
We do.
From AI disrupting traditional energy markets to trade tensions and the Fed's balancing act. It's a pretty complex landscape out there.
It really is. And what's fascinating is how interconnected all these seemingly disparate events are.
Yeah.
A decision made in one sector can have ripple effects across the entire global economy.
Yeah, for sure. Absolutely.
Yeah, it's like a giant game of chess. And we're trying to anticipate the next move. Take DeepSeek, for instance. The Wall Street Journal has an interesting article about how it's upended this big trade that Wall Street had going around AI and energy consumption. Remember how we talked about data centers being massive energy hogs?
Yeah, it was almost a given that the more AI we used, the more energy we'd need.
Exactly. And investors, including some big hedge funds, were piling into energy stocks based on that assumption. Natural gas producers, pipeline operators, even those companies owning land in Texas, where those data centers were popping up, they were all expected to benefit from this AI-driven energy boom.
Wow.
The Wall Street Journal even mentions how the price of natural gas for future delivery as far out as 2028 was going up.
But then DeepSeek comes along and changes the game.
Right. Their claim of training a sophisticated AI model with way greater efficiency really threw a wrench in those assumptions about skyrocketing energy demand. And as the Wall Street Journal points out, the result was a sell-off that hit those energy stocks pretty hard.
So it wasn't just a short-term reaction. Investors were reassessing their long-term bets on energy because of this one company's innovation.
It's a great example of how interconnected things are. This AI trade wasn't just about tech companies anymore. It had reached into the energy sector, and DeepSeek changed the rules. The Wall Street Journal even mentions that the sell-off extended to uranium mining companies, coal miners, independent power producers, all caught up in that initial AI enthusiasm.
It seems like a classic case of getting ahead of yourself, assuming things will continue in a straight line.
Exactly. But, you know, even amidst that sell-off, some investors were making strategic moves. The Wall Street Journal notes how some electricity providers, particularly their regulated utilities, actually saw their stock prices rise during this time.
Why would that be?
Well, it seems investors were looking for less speculative plays within the energy sector. They saw these regulated utilities as a safer bet in a time of uncertainty.
So even in a sell-off, there are opportunities if you can anticipate these shifts.
Absolutely. It's all about understanding the underlying dynamics and being adaptable.
Yeah.
And speaking of adaptation, let's talk about the semiconductor industry. They're facing their own set of challenges and opportunities in light of what DeepSeek has done.
Yeah, it's fascinating how this one company has sent ripples through so many different sectors. On one hand, you have investors worried that the demand for those high-end chips will drop. But then you have analysts saying that DeepSeek could actually be a boon for companies like TSMC in the long run.
The thinking is that if DeepSeek's breakthrough leads to wider adoption of AI, it could actually mean more demand for semiconductors just spread across a broader range of applications and devices.
So instead of just powering those massive data centers, AI could be integrated into everyday things. Think about our smartphones or even household appliances.
Exactly. The Wall Street Journal even points out that Apple, which isn't directly involved in this AI chip race, saw its stock rise during this whole tech sell-off.
Interesting. So investors might be betting on a future where AI is everywhere, which would mean more demand for the devices that use it.
That's the theory. It's a provocative thought, isn't it?
It is.
This potential disruptor, DeepSeek, could actually end up paving the way for a bigger, more diverse semiconductor market.
It really shows how unpredictable the tech world can be and how important it is to stay ahead of the curve.
Absolutely. Now let's shift gears to a completely different sector. Defense. While some industries are dealing with this uncertainty, the defense industry seems to be having what some might call a golden age. We have an article here from MarketWatch about RTX, formerly Raytheon, reporting a backlog of over $200 billion in orders.
Wow, $200 billion.
Yeah.
That's massive.
Yeah.
What's driving that kind of demand?
The article highlights a couple of key factors. First, there's strong demand coming from commercial aviation as passenger travel rebounds. But the bigger factor seems to be this unprecedented demand for defense products, things like missiles and unmanned aircraft.
I can't imagine that's happening in a vacuum. The global geopolitical situation must be playing a major role.
You're absolutely right. The MarketWatch article quotes RTX's CEO, Chris Callio, saying, "These are critical equipment being used around the world. We also expect continued strength in international demand for many of these products, with key partners and allies in NATO in the Indo-Pacific committed to increasing defense spending."
So while some sectors are pulling back, the defense sector is seeing a surge in investment and activity. It's another reminder of how global events can really shake things up.
It is, and it shows how closely intertwined these events can be. The uncertainty in Europe, for instance, which we were just discussing, is actually feeding into this demand for defense products. Speaking of Europe, Bloomberg has a piece about how traders are anticipating a more aggressive approach to interest rate cuts from the European Central Bank, or ECB.
Okay, what are they seeing that makes them think that?
Well, Bloomberg reports that markets are already pricing in a quarter-point cut from the ECB on Thursday. But some analysts believe that the ECB might need to go further and faster with rate cuts, particularly if President Trump follows through with those tariff threats we were talking about earlier.
So the ECB might have to take more drastic measures to stimulate the European economy if those tariffs start to hurt. And what about the euro? Will it be affected?
That's a good question. The Bloomberg article suggests that if the ECB does cut rates more aggressively than expected, the euro could weaken further against the US dollar, potentially even falling below parity.
So we're looking at a scenario where the US dollar might strengthen because of higher interest rates, while the euro weakens because of these aggressive rate cuts. That could have a big impact on international trade and investment.
It's a complex situation for sure. And to make things even more interesting, we have political uncertainty within Europe itself. The Bloomberg article mentions the newly installed government in France navigating a difficult budget process and upcoming elections in Germany after the collapse of Chancellor Olaf Scholz's coalition.
It sounds like Europe is facing some significant challenges in the coming months.
It does. And remember, those challenges could have ripple effects across the global economy. Everything is connected.
It seems like uncertainty is the word of the day. From DeepSeek's impact on various sectors to global trade tensions and the Fed's difficult decisions, there are a lot of moving pieces right now.
A lot of uncertainty out there. And as we've seen, it can create both risks and opportunities, depending on how you navigate it.
For sure. And when it comes to uncertainty, the Federal Reserve is always front and center. Everyone's trying to figure out what they'll do next with interest rates.
Yeah, it's a tough spot they're in. They've got to balance concerns about inflation with the potential fallout from President Trump's trade policies and this global economic slowdown.
Right. I was reading a Bloomberg piece about how Fed officials are expected to hold rates steady this week, but some economists think their next move might actually be a rate hike.
Yeah, there's definitely a growing debate about whether those recent rate cuts were enough or if the Fed will need to reverse course sooner than expected.
MarketWatch even had an article titled "Fed Rate Hikes Are Bound" back in the conversation. They were talking about how some analysts are watching things like inflation and unemployment numbers for signs that the Fed might be shifting its stance.
Right. It's important to remember that the bar for rate hikes is still pretty high. The Fed will want to see very clear evidence that inflation is picking up or that the labor market is overheating before they consider a change.
But the fact that it's even being discussed shows how quickly things can change. Investors need to stay informed and be ready to adapt.
Absolutely. It's a good reminder that we're in a period of transition, and the Fed's path forward is anything but certain, which, as we've seen today, seems to be the overarching theme across the board. From DeepSeek's impact on everything from energy to semiconductors to those global trade tensions and the Fed's delicate balancing act, there's a lot going on right now.
And it's impacting markets all over the world. We've seen how interconnected things really are. Decisions made in one country or one sector can have ripple effects across the globe.
That's the key takeaway for you. This global landscape is constantly shifting, and you need to be ready to adapt. New players like DeepSeek are emerging and challenging the status quo, forcing everyone to rethink their strategies. It can feel like a bit of a roller coaster ride at times.
It really can. But hey, that's why we do the deep dive, to help you make sense of those twists and turns so you can stay ahead of the game. We'll see you all tomorrow morning with new headlines from major financial magazines.